Yeah, my name is James Seyffart. I work for Bloomberg, and I work within a department called Bloomberg Intelligence. And we're basically we're a research shop, so we write research. Primarily, I cover ETFs, the asset management industry as a whole, and cryptos fall under my purview just because I actually, when I first started, I reported up to two people. I reported up to Eric Balchunas, who covered ETFs, and I reported up to Mike McGlone, who some of the listeners are probably aware. He's our commodities analyst, and he started covering crypto in 2017, and I helped him build up his coverage and understanding of Bitcoin back then, and crypto in general. So I basically, from that experience, I'm now an analyst myself, and I write about ETFs primarily, but crypto falls under that. So I still work with Mike, and then obviously crypto ETFs are those two overlapping charts are exactly where I sit right now. Yeah, me and Eric Balchunas, my boss, we were we came out pretty staunchly at the end of August that we thought there was going to be a Bitcoin futures ETF launched in October of this year, and that stems from Gary Gensler at the SEC. Basically, just he essentially outlined how a Bitcoin ETF could get approved. He said it needs to be all these things, what he's worried about, and then he said he wants it to be futures based, and he wants it to be under the 1940 Act, and you can get into the nitty gritty details of what that actually means, but the end reason is that one, the CME futures are already regulated by a regulator, a U.S. regulator, CFTC, and then also the 1940 Act has additional protections that the 1933 Act doesn't have. There's just restrictions on things you can and can't do. There's more requirements you have to fulfill. It's just theoretically safer, but it's in the grand scheme of things, I don't see it as that important. But obviously Gary Gensler does, or at least he says he does. So part of the problem is the way that these old ETFs are launching or we're filing. I'm sure many people have heard of oh, they're delaying again. They're delaying again. This whole process of we're delaying the ETF or denying and approving. It's the process for these 1940 Act ETFs is different, just because they're under the 1940 Act. There's a whole other rule that was passed last year, but essentially that under the 1933 Act, they have to go under what's called a 19B4 process. And I'm sorry for all these acronyms because it took me forever to get up to speed on them as well. But a 19B4 is basically this filing with the SEC to apply for a rule change, basically to change the rules. And right now you can't trade a Bitcoin ETF, a spot Bitcoin ETF. So all these prior filings, what most people are considered ETF filings prior to August of this year, were for those 1933 Act spot ETFs. And basically the filings would have been similar to what, if anyone's familiar with gold ETFs or silver ETFs, the underlying structure is something called a grantor trust, and it basically just holds the physical assets, and then you trade those on an exchange. Now, the way an ETF works is there's this whole process of creation and redemption, right? So basically what it says is a certain number of shares of the ETF are equal to a certain amount of the underlying holdings, whether that's a basket of stocks or a basket of commodities or a certain amount of gold, or in this case, eventually a certain amount of Bitcoin. So essentially what happens is if anything happens where the price in the NAV, so the NAV is the underlying value of the assets that it holds. So for an ETF, if the price goes too far away from the underlying assets that it's holding, somebody can go in and say, here, take these shares of the ETF and give them the underlying. So basically you're selling and buying constantly on the open market. And what happens just through that mechanism is that the price in the NAV or the price in the underlying value of the assets always stay in line with an ETF via that creation redemption process. Because I can always either hand them shares and get the underlying back, or hand them the underlying and get the shares back. And if they're not in the exact same, if they're not worth the exact same amount or roughly the same amount, it's free money, it's free arbitrage because you can just hand them back and forth. So that's how an ETF works, and that's why it's such an efficient vehicle. So futures ETFs, here we go. We started today. I mean, this thing is about to hit 900 million in trading on the first day, which is absolutely crazy.
Yeah, isn't the biggest of the year, biggest ETF launch of all time?
Probably biggest of all time. There's one ETF that technically has higher trading volume, but we don't consider that to be real. So 1 through 6 on our list of largest ETF launches are from they're basically institutions. So CalSTRS, pension funds, sometimes they'll go to these ETF issuers with an idea for an ETF, and they'll have just money sitting on the sideline ready to go. And then so they're putting 750 million in the first hour of trading because it's already ready to go into the fund. That obviously isn't happening with this Bitcoin futures ETF. So the most organic or real one is Buzz from Van Eck. social sentiment. Dave Portnoy was all over. It was all over Twitter when it happened. It was the largest, biggest volume day for a launch ever. And this is going to double it. So it's definitely big news, very big news.
And what do you think's driving that? Is it social media promotion? Is it just the overall easy exposure to investments that people have nowadays?
So one thing I will say for sure, there's a lot of pushback. I constantly have conversations with people who are like, there's no need for an ETF. I'm sure there's people who are diehard Bitcoin maximalists that think a Bitcoin ETF is bastardizing the white paper and all these different things. I've had this conversation with many people. So before I go into defending the ETF, I will say it's not really massive institutions. We have the way that where you can see what are called block trades, which are like somebody trading 20,000, 100,000 shares of an ETF, and you can see when those happen on the exchange. And there's just not that much of that happening with this thing. This is a lot of small fish trading this thing, or it's high frequency traders trading this thing. I'm not really sure. So the one big thing that we think that the demand for this, we expect it not to be this high, honestly, because a spot Bitcoin ETF, I wouldn't be that surprised with these volumes and this interest. Futures ETF, I'm a little surprised. But the one thing we have been saying is the futures ETF is going to be something. There's people who are not hodlers, that are trading these things like Coinbase, Gemini, these other crypto firms. I mean, they make a lot of money on those transactions, like way more than even a Wall Street firm makes. And it's partially because the market is so efficient for ETFs. Like these things are trading less than a penny wide on the bid-ask spread, and there's no transaction fees. So if you're trading this on a daily basis, like there might be traders that are typically used to trading things on regular crypto exchanges that might jump over here potentially, just because it's such an efficient market. And then going back to defending the ETF, the problem is, so I know there's plenty of people here that probably have nearly 100% of their net worth in crypto or whatever it may be. But right now, advisors own the range is from somewhere around like 8 trillion to 30 something trillion dollars in AUM in the US. We'll say 20 to 24 trillion. And if for the most part, if you talk to most institutions, even crypto firms in general, they say you should be putting 1% to 5%. You should be putting money in crypto if you're going to be doing that. So if you're an advisor and you're going to put 1% of your client assets in there, until recently, there was no real easy way to do that, especially within the built-in infrastructure system. And a lot of these advisors are built up on legacy wirehouses that just have all this back office system. So even if you wanted to put 1% of your client's money into Bitcoin, it just was not worth the hassle. So an ETF like GBTC, a lot of people got canceled. They couldn't use it because it was OTC trading. I'm sure there's plenty of advisors aren't going to be able to buy this because it's futures and rolls and just they restrict some stupid stuff. But essentially, even if like a tiny 0.001% of that 24 trillion goes into Bitcoin, that is tons of money and just more adoption that can take place, more people that can get involved in the Bitcoin ecosystem. And that's a positive thing for Bitcoin as far as I'm concerned. And believe me, I've debated plenty of people who think opposite, but yeah.
Yeah, I agree. I think it's a positive as well. Anything that can make it easier for people to get some exposure, not only to the price, but eventually a spot ETF is some good solid exposure to Bitcoin. Like the question to me is not really, do you want this version of Bitcoin versus that version of Bitcoin? At this point in adoption, I think it's just, do you want Bitcoin or not? And I think the answer, clearly the market is telling us, is yes. People would like as much access to it as they can get.
Overwhelmingly, yes, at this point. So when the ETFs launched in Canada, they launched spot ETFs back in February. Those things were some of the most traded ETFs. They were like the BTCC from Purpose, which is again a spot ETF. Its first day of trading, I think it was the second most traded ETF in Canada. Like that is just insane. Like and for the size of the market and the amount of money that thing started trading immediately, it was like, wow, this is crazy. And today, obviously, we're watching this and kind of a little bit shocked at how big this was. We thought this was going to be big. We were expecting to be huge, and it's still bigger than we thought it was going to be. And I would say also, I've written plenty where I disagree with Gensler going down this route. I don't think futures was the right way. I think if he allowed a futures product to launch alongside a spot product, and let democracy take over, let people put money where where they want to put it, a spot product would have overwhelmingly won. But obviously he has genuine concerns, either that or he's doing a little bit of CYA. There's plenty of people in the government and other levels that are concerned about Bitcoin, concerned about the volatility, concerned about having 70% drops, concerned about it being a scam used for used illicitly, which obviously there's plenty, we can talk about that, but we don't need to go down that road. And then it's definitely being used as ransom, which people are not happy about. So I think Gensler was just looking for a way to say that he, didn't automatically approve, just didn't go right away. He went through a regulated futures market. He was worried about the 1940 Act. It's just a way for him to slow down. Yeah, I think we're probably, based on his words, even in an interview today, that we're probably a pretty far away from an ETF being launched that's spot, maybe next year. I don't know how much of him is talking about the 1940 Act is really important to him versus just him signaling different things. But yeah, a spot ETF doesn't seem likely this year at all, in my opinion, or GBTC converting. I know there's a lot of talk about GBTC converting today.
Yeah.
There's probably not a lot happening there, in my opinion, either.
Yeah, I just talked to the VP at Grayscale, and they've filed, but it could be a couple hundred days before that's approved or denied. The SEC doesn't really have to do anything, it seems, one way or another. So yeah, and Gensler's already expressed the preference for the futures. So I think we're gonna the futures ETF. So I think we're just gonna watch that play out for a couple months here at least.
Yeah, I honestly think we could possibly see an Ethereum futures ETF before we see a spot Bitcoin ETF, just because Ethereum's futures market is growing, the open interest is growing. It's not at the Bitcoin levels, but it's growing. And there we saw some filings, the SEC made them pull back. But so it kind of goes back to what Grayscale is filing is that 19b4 that I talked about. And if anyone is familiar with the ETF process, basically they file, and then there's a certain amount of time before the SEC posts it on the register. And then there's 45 days where they can approve or delay, and then 45 days where they can approve or delay, and then 90 days, I think, and then they can approve or delay, and then 60 days where they can approve or deny. So it's like a 240-day period after it hits the register before they have to make a decision. Now, that said, Van Eck, who's been trying to file and get one of these things launched forever, they're actually due, their final date is November. Actually, Gabor, I thought it was November 11th, but Gabor said it was November 14th from Van Eck. He tweeted about it today. Yeah. So we're going to get a decision from them on how they look at 1930X spot Bitcoin ETFs based on comments. I'm assuming they're going to not deny it still. Bitwise just filed again last week, and with a ton of research on the underlying Bitcoin spot market and different exchanges, using the futures market, the Bitcoin reference rate, all these complex things about why they think the SEC's concerns for denying past spot products are no longer relevant. Honestly, I think a lot of their concerns just seem a little ridiculous to me. We've seen spot Bitcoin ETFs operate just fine in Canada, right above north of us, and they've been operating fine in Europe for years at this point. So we'll see.
Yeah. I just one comment on the Ethereum futures. It's interesting to me, and especially watching Gensler kind of slow everything down by, I mean, admittedly, like expressing a preference for the futures, just kind of like playing this slow chess with the public. Is he's got a background in Bitcoin. I mean, yeah, he really understands this stuff more than he lets on.
I can't even tell you how many people on Twitter are like, he doesn't understand this stuff. Look at the negative things he's saying. I'm like, he's a politician. Like, go watch his MIT class and tell me he doesn't know anything about blockchain or Bitcoin. I watched a couple of his things. He knows more than me. There's no doubt in my mind that he knows more than me about blockchain and Bitcoin. Like, this isn't some guy that's just, I don't know. They have to realize that he's in a political office, and like he can be removed if whatever, for different reasons, right? So he's not just some guy teaching at a school anymore, and there's people that he answers to and all these different things. So and obviously him approving this and getting this through the SEC is, I mean, there's obviously people would prefer to spot. Some people don't care about an ETF, but one thing I will keep saying is this is 0 to 1, right? This is not, like, granted, it's not 100. We're not at 100 here, but this is moving off 0 for the SEC in approving a Bitcoin futures ETF, which is maybe not a massive thing in the grand scheme of like Bitcoin demand right now, but is a massive thing in US acceptance of Bitcoin and cryptocurrencies, in my opinion.
Yeah, historically, like let's just not make the perfect the enemy of the good here. I think this is a great day. This is an exciting day.
Yeah, yeah. There's not much else to say as far as I'm concerned. It's a positive thing. And the one thing I would say is people just assuming that Gensler doesn't know what he's talking about. They're wrong. They're blatantly wrong. And there's some prominent people in the Bitcoin community that think he's like out to get them and destroy them and blah 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 and all this stuff. So uh,
I think he's a closet Bitcoin maximalist. I
maybe,
mean, I've never met the guy, but I wouldn't be surprised at all if he had a bunch of
yeah.
Bitcoin.
I wouldn't be
Yeah,
surprised. I doubt it though, but he
yeah.
might have some somewhere.
Well, is there any last remarks or any future predictions from you, James, today?
Um, Let me think about predictions. Um, so one, I feel like I should address GBTC a little bit more.
Okay.
So we talked about the way an ETF works and that creation redemption mechanism where the underlying is equivalent to the shares of the fund, right? So you can always go back and forth. The reason GBTC is trading at, I believe, a 19% discount right now, 21% discount yesterday. So basically you can buy Bitcoin at 21% below market, which
Hmm.
sounds great. But again, that only works if you can do that process of exchanging the underlying for the shares of the ETF or fund in this case, or vice versa, which you cannot do with GBTC because it's not an ETF. It's a grantor trust. It kind of acts like what we call a closed-end fund. So right now the fund's actually closed. You can't even create shares, but for many years, you could create shares by putting money into it, and then they were locked up for 6 months, and then you could sell them in the exchange. But there was no actual redemption of those shares. So I couldn't hand them shares of GBTC and get the Bitcoin back. When GBTC is able to convert or they're officially accepted by the SEC, so whether the SEC approves a spot Bitcoin ETF, and then GBTC is in the process of also being able to convert, that discount should basically go to zero once the approval is announced and it's official. And if it's not at zero when it's announced, when it converts, it will go to zero because market makers will step in and take delivery of the Bitcoin for shares of GBTC. But again, the big question here is we have no idea when that is going to convert. It could be. I personally think it should be 2022. I think a lot of the questions have been answered. I think we'll see as long as there's no issues with these Bitcoin futures ETFs, maybe the SEC will get more comfortable. But who knows? I mentioned there's a whole bunch of spot Bitcoin ETFs that have those 19B4 applications that where their final dates are coming due in the next few months. But Bitwise again just filed, and then Grayscale's filing. But again, if one of those other products gets approved for the 19B4 to trade spot Bitcoin ETF on the exchange, then Grayscale can probably start going through that process of transitioning to an ETF. Just anyone who says they know when that's going to happen is lying or full of themselves, in my opinion.
Okay, good to know. So we should expect to see when probably next year, if it passes, that premium or discount go to next to zero, and it should track Bitcoin
Yes.
accurately.
So that discount issue with basically the GBTC, the ability for the price to completely trade differently from the value of the underlying is a concern for GBTC, especially for anyone trading it, because you're not guaranteed to get the same price movements of Bitcoin. You vastly underperformed if you bought GBTC a little over a year ago. But that said, a futures ETF is not necessarily going to be perfect either. So a futures ETF, what you do, you roll the front month contracts, right? So you have the October right now, they expire on October 29th. You have to sell those and buy the November contracts, right? And that's how you get to stay close to the spot of Bitcoin. And when those November contracts are trading at a higher price than the contract you're selling, or in this case, they'll be October, that's called Contango. So basically the next contract is a higher price than the one before. And so the steeper it goes in Contango, the more you're basically going to underperform spot Bitcoin as that goes along. So typically that happens in like markets like oil. So oil, it costs a lot of money to store barrels of oil and deliver them and ship them. So there's a lot of costs in actually doing that. But for something like gold, it's a little bit easier, and the Contango tends to be way cheaper, way lower, and not as much of a drag. And honestly, Bitcoin's Contango at times has made absolutely no sense. There should have been more institutions in there. There are plenty of institutions. I'm sure people on here have tried to do this and arbing the difference. You can basically a cash and carry trade where you short the futures and you go long the spot, and you can basically get that difference when the futures expire. So Mike McGlone, the guy I mentioned earlier, is of the opinion that we are going to see that roll cost, that contango cost, come way down in the future.
Mhm.
But right now it's been averaging around 10 to 12% a year, which is not good. It's not what people really want. You wouldn't have that in a spot ETF. But honestly, from September to September, so 2020 to 2021, if you're just rolling the front month contracts a day or two before expiration, you underperformed Bitcoin by like 36% over a year. So there are issues with futures ETFs. Now, the flip side of this is I talked about Contango, where the next month's more expensive. Backwardation is the opposite situation, where the next month is cheaper. So that tends to happen in with Bitcoin in bear markets. That does go into backwardation at times. And in those instances, the futures ETF will actually outperform spot market. So there are different areas. There's pros and cons. So you just kind of, if you're looking into buying one of these ETFs or GPTC or whatever it may be, you just need to do a little bit of due diligence. I mean, everyone saw the SEC tweet about Bitcoin futures and mutual funds and funds that they want to make sure people who are buying these things kind of understand what they're buying, and they're complex. I mean, I study this stuff and I still sometimes have to remind myself exactly what I'm looking at and how to calculate the roll costs and all these different things. So it's not something easy to understand, which is part of the reason why I was more in favor of them just approving a spot ETF, because it's like, it's easy to understand. It holds Bitcoin and that's it. Whereas like right now you have people have to understand, oh, it holds Bitcoin futures, which are these contracts that can be, which also have margin in them. So you can basically, when you buy a contract, you need to put up, so basically if you put up $1,000 of what collateral, the Bitcoin contracts right now are 2.5 to 1. So you're getting access to $2,500 of Bitcoin for $1,000. So there's leverage built into the system. There's all these different complex things that like you kind of have to wrap your head around when you're thinking about a futures ETF. That would not be the case with the spot ETF, but obviously the SEC just isn't comfortable there yet.
Yeah, they thought otherwise. Well, excited to see how this plays out, and we'll have to follow up with you in a couple weeks and see how you're doing, because it's going to be a busy time for you.
Yes. Yeah. Right now, BITO. It's what time is it? It's 3:25. So we have 35 minutes left of trading today. Yeah, I know Bitcoin trades 24/7, but ETFs don't. It's at $897 million traded today. So obviously not nothing. That is a big deal, no matter how you slice it. So we'll be watching to see if that demand pick stays level. So sometimes we'll see launches that like they have huge demand on the first day, and then the volume just goes way down. So we'll certainly be watching the next few days, few weeks to see what the demand looks like. And it looks like, I should have mentioned this, it looks like Valkyrie might actually be launching their futures ETF tomorrow, potentially, which we haven't gotten confirmation yet, but we'll see. So there will be competitors in the near future to BITO. And Valkyries will be BTFD, which is just
that's hilarious,
fantastic ticker. So they filed for BTF, and everyone on Twitter was like, they should change to BTFD, and they literally changed it to BTFD.
Do you think those two will compete, or can Valkyrie even catch up to BITO at this point? It seems
so that's a complex question, right? So there's two ways that you can look at this. In the ETF world, there's the assets, the amount of money the fund has, and there's also liquidity and how much it trades. Liquidity is something, assets, you can kind of bring your own assets, right? So if Valkyrie has a contract or institution lined up ready to put money in the futures ETF, or they have good relationships with somebody and they want to put money in, they can get a couple $100 million from an institution. But what you can't do is you can't just buy volume, right? You can't buy liquidity. It's part of the ecosystem. It just builds up over time, and launching first is huge. That's why BTCC, from purpose, it's still the largest in Canada, but the Coinbase, the CoinShares 3IQ ETF, which launched a couple months after, is also near like $1 billion up there in assets. But they have nowhere near the volume. It's literally like 1/70th of the volume. So traders aren't really using that. There are people obviously allocating it, putting money into it, and as far as CoinShares /3IQ is concerned, they're making money on that fund, but actually generating liquidity and the ecosystem that liquidity brings is huge. So tomorrow, BITO actually should have options trading on the ETF, which is another thing. So there's options. The actual liquid trading on the exchanges here are all things that just build ecosystem, bring more people into trading this thing, and make it more. We call them like pseudo futures. Basically, they just get used as super liquid trading positions. So it's going to be hard for competitors to catch up, especially if the volume like this just stays with BITO. But as far as asset levels, they can certainly get up there, especially if they have like buy and hold clients or people that know Valkyrie, because they're more of a crypto specialist firm. They're brand new, but they're more of a crypto specialist firm, where ProShares is more of a trading specialist firm. A lot of the products are leveraged ETFs that are daily leveraged 3x, 2x on some index or something like that. So ProShares is very familiar with the trading crowd. So we'll see, but it'll be hard to catch up with the amount of volume that we saw here today, especially if this maintains anywhere near the level that it hit today.